Hello and welcome back to another video. For those of you who don't know me, my name's Jared, and I am a guy on YouTube who just enjoys making videos about finance and financial literacy and trying to share some of my knowledge and what I got going on. I am in no way, shape, or form a financial advisor, not your financial advisor. Please do your own research. So, today, what's going on with the market? Well, you got rare earths going to all-time highs. You can see crude oil up, gold up, silver's up. All these other markets are up. What's going on with the healthcare industry? It's going down. So Medicare rates came in at 0.09%. That's what's anticipated as of right now. From what I can see, is it's not actually locked in for a little bit. So that's a little bit of a scare that's happening in the market right now. And United Health Group is one of the companies that I actually do have a few shares in. Um, in full transparency, when Warren Buffett bought is actually when I sold. I bought in prior to him and or Berkshire Hathaway, and actually had quite a bit of profit. So I did actually trim some of my um, holdings at that point. So I did buy back in when it was back down again underneath what I sold at. So kind of playing the market a little bit. And so let's get into United Health Group and see what is going on. So today they are down almost $69, almost 20%. They had a 52-week range, 234.60 on August 1st to 606.36 on April 11th. So in reality, when we look at the chart, we had a massive gap down today. Parts of that are for the reasons of earnings, which it's earning season. Earning. So when earnings happen, a lot of people some people say you trade during earning season. Some people say you need to stay away during earning season. It all depends on the company you're investing in. If you actually believe that they had great earnings and they're going to go into it and you're anticipating things to be solid and the future outlook to be great, then absolutely it's a great opportunity. However, it is investing and it's borderline gambling. So one of the major things with the United Health Group outside of the Medicare rate is actually not so much the earnings they reported, but the future outlook. So they were very weak. And when I say they were very weak, they actually are reporting that they believe they're going to have a 2% decline in revenue. So when we take a look at their earnings here, they actually beat after they're adjusted. Their adjusted was a 0.01 increase, and their consensus estimated EPS was 2.1. I believe when they initially reported, they were saying they missed by like $740 million, and after the adjustment, they actually scored a beat, which is great news for them. However, it did not help overall. And the reason why I say that is when we scroll down here a little bit, and this is all through Fidelity, it's my preferred investing platform. It's easy to use. They give you plenty of information. You can always look into things more in depth. I also use Seeking Alpha, a couple other um, YouTubers. I watch them as well, just to maybe they see something that I didn't, that kind of deal. So we look at EPS growth, trailing 12 months versus prior trailing 12 months. They went up, almost 25%. That's great. They almost doubled the industry average. And then we scroll down to the last quarter versus same quarter prior year, negative 60%. That is a part of the reason why they are so far down, along with the weak future guidance. So with the weak future guidance, and them already saying that they're probably going to be down on revenue, there's a lot going on with United Health Group that I know a lot of it's out there. That they had a cybersecurity attack. They lost a bunch of money through that. Obviously, changing of board members. I think everybody remembers what happened there. But all that costs money and that all affects their bottom line. So their operating margins were very, very slim. I think it was like 0.03%. That part of the guidance I thought was actually pretty good. They're increasing their operating margins, or they're going to work towards that to a 5.5%, which is going to be a huge increase. So if they earn a little less but make a little more, that might actually be the signs of a strong company that's going to have more potential in the future. And that's kind of what I'm looking at, is maybe not where they were at last quarter. Where are they moving forward to in 2026 and even into the future, 2027? That's what we need to be looking at when we're doing our investing. I would love to be able to sit here and tell you guys the next stock that's going to triple, quadruple, 100x, and everybody's going to make a ton of money. I'll be honest, if I could find that stock, I probably wouldn't have a need to do anything. I would have did it, right? So in reality, when it comes to investing, to mitigate the fact that it's kind of like gambling, is to make sure we do our research into the companies, who is running them, what their earnings and their strengths are, a good foundation, a good income statement, good cash flow, low debt. That's another thing. They are shooting for 40%, and they were at 48%, I believe, from what I read in the income statement. So they were a little higher on their debt in this last quarter, which obviously affects things pretty great. It increases the risk of the company, right? So if they can really focus, like they say they're going to, on moving out of the states where they're not making as much profitability and moving into states that they're making much more profitability. Granted, I don't really necessarily always agree with that. They are an insurance company. So at the end of the day, we're looking at it from a numbers on a screen or on a page, not actually what they're doing, because of the fact that it's insurance. Their least profitable people would be sick, elderly, things along those lines, people along those lines. And I hope the best for everybody, and I hope that everybody gets the coverage and the healthcare that they need. By all means, that's my own beliefs, but in reality, we're just looking at it from the basics of a company. So they missed terribly on growth. They are setting up, and we're dropping, their PEs dropping, their prices dropping, in terms of them having no growth in quarter one 2026. So they have a higher earnings estimated. So they already kind of said that they're probably not going to hit that effectively, right, by having revenue down. Hopefully their earnings do go up and everybody can be happy, but that's not always going to be the case. So if they focus on building that strength in the company, that's going to be fantastic for us. We're going to take a look at the chart and show a little bit. So we had a massive gap down today, right? You had a lot of selling pressure, tons of movement to the bottom side. This is not always going to be the end of the world, right? We can scroll back, and back in 05/12/2025, we also had a gap down from 381 all the way down to 311, so $70. We had a gap in 04/16/2025 from 582 roughly all the way down to 452, so almost $130. These gap downs happen, most of it's driven by fear and massive, obviously, sell-offs and everything. And with the rates being lower than what was anticipated, 0.09 instead of 4 to 5% that was anticipated, and the weak future guidance, and everything just kind of compounds on one another, and it causes these gaps down. You also have massive gaps up, right? So we were down at 510. they ended up shooting up to 585. So that, $70 gap up. So it can happen both ways. Now, do I see that actually happening tomorrow? No. Um, I invest for the long term and in companies that I see value in and value into the future. So we're talking 1 to 3 year time terms, not trade, buy today, sell tomorrow, buy again next week, sell again at the end of the week, that kind of deal. We're looking at long term value plays. So now the ultimate question, right? Am I going to buy, sell, or hold? Because I do own some shares. I'm not looking to sell as of right now. And I am not looking to buy, but I'll make that decision a little bit later on this week. There's still some uncertainties out there. Everything could change tomorrow. It could change by the end of the week. We could have some more guidance, or we could have another political whatever news come out that could just drive this stock even lower. If when it goes lower, I'll reevaluate and I'll take a look. But I am looking at a current hold on my position and with the inclination to buy. But I want a couple of these more uncertainties in these next couple of days to play out to actually show me where the market's going. Is it going to continue going down? Are we going to come back up and test this resistance at 308.75? Or are we going to come down and test the resistance at 267, 17, 270, somewhere in there? So tomorrow and Thursday will kind of be the days that are going to start to show us where this market's actually going or this share price is actually going to go. That's exactly where I'm looking for. So hopefully this guy kind of gave you some insight. Just because you see a $60 move or 20% move doesn't always mean it's the end of the world for a company. So please do your own research. If you got any knowledge or it sparked any kind of interest by watching this video, please hit like, share, subscribe. Whatever it is you can hit, just go ahead and hit it. Leave comments or a comment if you enjoyed the video, if you have a certain price that you want to see United Health Group go to, or if there's any other stocks that you would like me to take a look at and do a video on. I have no problem doing that. More research, the better, right? So have a good one.